Welcome back to the Market Chronicles. This is episode 17, and we've got another deep dive for you today.
That's right. We're cutting through the noise to give you those essential market insights.
And today, we're really digging into some recent commentary from James Lavish. We've got his analysis right here.
Yeah, looking at his thoughts on, well, quite a bit. Bitcoin, bonds, the dollar.
Potential economic headwinds, too, right?
All right.
This interesting basis trade he mentioned.
Definitely. The goal is to unpack all of that for you, get to the core of what he's seeing in the markets right now.
And hey, if you happen to be watching us on YouTube, do us a favor and hit that subscribe button. It really helps us keep bringing you these analyses.
Okay, so let's start with Bitcoin. Lavish noted sort of local bottom, maybe around 75K.
Yeah, and resistance up near, was it 88 to 90,000?
Right. But the really interesting part, I thought, was his comparison to gold.
You mean as a potential safe haven? Especially with the dollar looking a bit weaker.
Exactly. And the key thing he's looking for, the thing we're all sort of watching, is that decoupling.
Decoupling from risk assets. So Bitcoin moving independently from, say, the NASDAQ, even if bond yields are rising.
Precisely. Rising yields meaning falling bond prices, of course.
Right. Always good to remember that inverse relationship. Newer bonds pay more, so older ones have to drop in price to offer a competitive yield. It seems simple, but it trips people up.
It does. And Lavish points out something odd happening there, too. Usually when stocks fall, people rush to bonds, pushing yields down.
But that's not really happening, is it? Or at least not consistently.
Not in the way you'd expect. Lavish ties the yield spike mainly back to the Fed, hiking rates to fight that post-pandemic inflation.
Which came from all the money supply expansion. Yeah, makes sense.
And those rising yields, well, they weren't just theoretical. They hit the banks holding older treasuries hard.
Silicon Valley Bank being the big example he brought up, the value of their bond holdings just plummeted.
Exactly. Which leads to his point about U.S. treasuries maybe not being totally risk-free anymore.
The soft default idea. That the government might just print money to pay its debts, effectively devaluing the currency and the bond returns through inflation.
It's a serious consideration.
Yeah.
And speaking of risks, he also talked about potential economic headwinds.
The tariffs discussion, right? Trump's proposals.
Yeah. Lavish flagged a few concerns there. One was importers trying to front-run the tariffs, buying stuff early.
Which distorts the demand signals, makes it hard to see the real underlying strength or weakness in the economy.
Right. He suggested there might be weakness hidden behind some of the data.
Yeah.
And that tariffs could really hit company earnings later on.
And for bond investors, the worry is, what? China selling treasuries?
That's the fear. If tariffs provoke countries like China to dump U.S. debt, that pushes treasury prices down and forces yields even higher.
Compounding the problem. He also mentioned the dollar index, the DXY, weakening. Is that related?
Could be. It might reflect those dynamics or just, a general waning confidence in the dollar or U.S. treasuries. It's all interconnected.
Okay, so let's talk about this basis trade he mentioned. He called it potentially explosive.
Yeah, something known mostly to sophisticated investors. He brought up the Brookings Institution.
Which he described as almost like a research arm for the Fed, right, with former officials involved.
Kind of. He mentioned the SAM rule for spotting recessions came out of Brookings, just as an example of their influence.
So what's the worry with this basis trade? Why is it explosive?
The main concern seems to be unwinding it. If it has to happen quickly, without the Fed managing it carefully, it could be catastrophic.
Like systemic risk, kind of catastrophic?
That seems to be the implication. And he noted that even with the known risks, new funds might still be piling into these trades, so the overall exposure is a bit unclear.
It just highlights how interconnected everything is. He suggested a big stock market drop could mean a deep recession.
Which then probably leads to more money printing.
And potentially higher bond yields again, weirdly, to compensate for the inflation risk from all that printing. It's a loop.
It really is. And while all this is happening, he pointed out gold is, quote, ripping higher.
The classic flight to safety playing out there, at least.
Yes. But Bitcoin's behavior, he called it very interesting. Is it finally acting like gold? Is it just arbitrage becoming more efficient?
Or just the weaker dollar lifting all boats, maybe? Lots of questions there.
Definitely. Which kind of brings us nicely to his points on SAB 122.
Yes, the accounting bulletin. This repeals SAB 121, right? Explain that again.
So SAB 121 basically forced banks, if they held crypto for customers, to list it as a liability on their own balance sheet.
Which is expensive from a capital requirements perspective, right? Discourage them from getting involved.
Massively. Lavish mentioned Congress tried to repeal it, but Biden vetoed, apparently due to anti-crypto pressure.
But now SAB 122 is in effect overturning 121, so the barrier is gone.
Essentially, yes. And Lavish thinks this is huge. It could mean big players, Chase, Citi, Wells Fargo might finally start offering crypto custody, trading.
Directly to their massive customer bases. Wow.
He's framed it as that classic cycle. They fight you, and at the end they join you. He sees it as a major bullish factor for Bitcoin.
Yeah, you can see how that could contribute to some of the recent strength.
Absolutely. It's another big piece on the board.
So, wrapping it all up, the picture Lavish paints is one of, well, significant uncertainty.
Definitely. You've got confusing economic signals, these geopolitical risks like tariffs, and then these complex underlying market structures like the basis trade.
And big questions about where bond yields go next. Is it a slow grind down in a recession, or does inflation spike again from more printing, pushing yields up?
It feels like we're walking a tightrope. And as Lavish implied, sometimes even just a tweak can move markets in this environment.
A key takeaways seem to be, watch the bonds. They aren't acting quite normally as a safe haven. Gold is strong. Bitcoin is interesting.
It's a complex mix, for sure. Understanding these different forces, like the ones Lavish highlighted, is pretty crucial right now.
Absolutely. It really makes you think. So here's something to ponder. Given this backdrop, potential inflation, potential recession, this evolving role for assets like Bitcoin, how are you thinking about navigating this uncertainty?
That's the big question for everyone, isn't it?
It is. Well, thanks for diving deep with us again on the Market Chronicles.
Always good to unpack these things.
And remember, if you're on YouTube, please subscribe for more deep dives like this one. I'll see you next time.